Deal Search Elite Masterminds. What's going on? This is Diamond Life. So I'm doing a win review on US30 and a win review on NZDUSD, which is still going. Okay. So what I did here for this win right here is I went to New York Open, which starts at 9:30, right? So New York Open starts here. Actually 9:30 is, I'm on a 1 hour chart. So basically New York Open started here, right? So what I did was I asked myself, I said, okay, so where's the nearest Fibonacci setting? Okay. I have a lot of tools because I did a lot of work and a lot of training. Okay. I'm not one of these lazy ass people who want indicators to do everything for me. I actually realize I actually have a brain and I can use it. No, nothing against people who use indicators. I do use indicators. Some think Fibonacci is an indicator in a way, but I'm talking about, MACD and all that kind of stuff. But anyway, so what I did was ask myself, well, where's the most recent swing? Okay, so here's a swing low here. Here's a swing high before 9:30. All right. Now you can put the Fibonacci on the wicks or you can put it on the bodies. All right. So the way ICT teaches how to do it is to put it on the bodies. You have to kind of like back test and see where price goes and see if the wicks work better for you or does the bodies work better for you. So I put it on the bodies right here, right? This is a 1 hour fib. And so what I like to do is I like to color coordinate the fibs as well. What I mean by that is I have certain colors for certain time frames. And you'll see if you practice this, you'll see it actually helping you out. So for the 1 hour chart, I have this gold color here. Okay. Because you're going to have multiple Fibonacci's on your chart. And then if you don't color coordinate it, you're not going to know which fib is what, right? So here's a fib. So then I went down to the 5-minute chart. Okay. So I went down from the 5-minute to remember, New York Open is at 9:30. Okay. And I'm about to teach something about Fibonacci as well, just a generic Fibonacci teaching. So New York Open starts at 9:30. So remember, before 9:30, I asked myself, where's the most recent high and recent low on a higher time frame? Because remember, you could have saw this is a swing here. Well, this is a swing. You have to go on a higher time frame. So the way it usually works is with Fibonacci is that if it retraces past the 50%, you can take a buy and you can hold it up to -61, which is up here. Okay. Either -5 or -61 point. This is generic. I'm not saying this is end all be all. You have to actually do the work to see how it really works. But if you don't know shit and you're a little lazy, then just know that if it retraces past the 50%, then it's probably going to go to the -61.8. Okay. If it retraces past, this is not an end all be all. This is not a panacea, because right here you can see that it retraced. And the other rule is if it don't retrace past the 50%, then it's going to reverse at -27. Okay. Or -25 for people that do standard deviations. So I said, okay, well, if it can break this high up here, then I'll consider this the retracement. So I let New York open. And then once this high was broken right here, I said, okay, this is official low. It's probably not going to go any lower. So based on Fibonacci theory I just gave you, it didn't retrace past the 50%. So I'm like, okay, well, I could take a buy once it takes this high right here, right? I had to wait till this high is broken right here, because this is an indication that price wants to go higher. So once this high was broken, I went ahead and got in for a buy. And I said, okay, I can hold this buy all the way up to -27. You see this? -27 is where? -27 is here. You see that? -27 is here. Now, of course, it went a lot past -27, but I'm trying to tell you, if you actually back test this, you will see that if it don't go past the 50%, most likely it will reverse at -27 up here, even though it kept going. That's why I'm trying to tell you this is not a panacea, meaning this is not an end all be all. Like the rules that I just gave you is not, the buck doesn't stop there. You have to do your research, but you will see if you put it on the right fib swings, you'll see that if it don't go past the 50%, then it's going to reverse at -27. So what did I do? I went ahead and got in at 3 positions. I got in at 3 positions here, and my stop loss was down here below this low here. Okay. So I got in at 3 positions. Soon as it went above this high, I got in at 3 positions. Okay. So price went up here. my first my first take profit was here at negative at the 0% up here. So I took a position off right here, and then it went up here, retraced back down. I got in for another buy down here, and then when it retraced down right here, I was like, oh shit, maybe I'm wrong. And then when price actually got above this 23.6, this is a continuation on the Fibonacci. Once I said if price goes back above here, and closes above this 23.6, I'm going to get in for another buy. So I waited for price to close above here, and I got in for another buy. And I said I'm going to hold it all the way to the negative 27, even if price goes all the way back down here and does all this bullshit before it goes to my target. So this is the negative 27 right here. Price went there, and I sold the other 2 positions, the other 2 positions I had. Okay. So even though price kept running, I'm like, I'm not about to just hold on to the shit, and I don't even know where it's going. If you understand Fibonacci theory, then the trade was to get out at negative 27, not gamble and hold all the way to negative 61.8, which it did. You see it reversed off of negative 61.8. So this is a key reversal area. Okay. Now let's go to NZDUSD. Fun right here. Now what I did here was I did something called shadow trading, which I created. These are shadows right here. So if you see this in anybody else's videos, they got it from me, because I didn't get this from anybody. Now these are the shadows right here. Now what I mean by the shadows, basically you have to figure out what pairs move the exact similar to each other. You can't go to myfxbook.com. You have to do more research. If you look at the sister trading videos I have on this YouTube channel, then you will see exactly how to do that. So if you can see right here, based on this shadow, these areas right here, these are standard deviations. Okay, so I put the Fibonacci, I put the fib on the first 5 trading days of the bodies. The 5 trading days high, the highest body and the lowest body, and it gives you these standard deviations. Okay, so what I did was I looked at GU, and I said, okay, well, based on this line right here, and this is a line right here, I just have I have an alert right here, but this is another standard deviation line. So I said I looked at GU, which moves similar to NZDUSD, right? They move very similar. So GU had already hit this line right here, and it hit the standard deviation. Then I said, okay, what else moves similar to NZD/USD? What else? What else moves similar is EU, Euro USD. So I looked at Euro USD. Remember, it already hit this line, and it hit this line. These are standard deviations. So think about it. If EU moves similar to NZD/USD and GU moves similar to NZD/USD, and they both hit this line and this line, then what the hell do you think is going to happen right here? What do you think is going to happen? It's going to hit this line. That's why I have an alert right here. I'm already up like $2,000+ right here. Okay. But I'm not going to hold for price to come up here, even though I should, because these two already hit this line, but we may have a deep retracement. You see how this was a deep retracement going down before it goes back to catch up with these two, right? This is what ICT calls the six sister trade, or what I call the sibling trade or shadow trade. Okay. So I'm getting out right here. I could hold for this standard deviation right here, but I'm just going to not be greedy and get out here. Okay. So I'm actually still in this trade. I did take a few positions off. I'm still in this trade. I could take a few positions off, but I'm going to hold for price to at least hit this area here, because remember, GU and EU already hit these areas. You see that? So actually, when I did my own research, GU, EU, NZD, GPB CAD, and AUD CAD move similar. Okay. So I did take off a few positions. I may shoot another video when this actually hits this area, but I'm looking for a price to hit this area here. So I may put in the before and after review. But yeah, so let's see. I actually got hold on. I have a call out to where I got in at. Will this do US30 Friday breakout to the close? Oh, okay. Yeah, so I actually got in right here. And I said that I took a buy because EU and GU both hit the turquoise line already, so it has to catch up. You understand that? So the turquoise line is up here. I'm not going to hold for price to come up here because it's going to come up there, but I don't want to endure the retracements. Like it may come all the way down here and then, come all the way up here. I don't want to do all that. I just want to not be greedy and aim for this line right here, which GU and EU already hit. Okay. I haven't looked at GBP CAD and AUD CAD. I'm pretty sure they are. I think they already hit those areas as well. I should have had it on here. I should have had a shadow for no, I think I have a shadow on here for GC. Yeah, hold on right quick. Yeah, GC already hit. Yeah, GC hit this area as well. GC hit this one, and this orange one up here. That's why I have it labeled orange. So GC is GBP CAD and AUD CAD. AC. Yeah, AUD AC right here. I need to put another shadow on, an updated shadow for AC. Okay, which is AUD CAD. So yeah, so so I got in here. I'm about to end the video. So I got in here. And I think I put in 3 positions here because I always put in 3+ positions. So I took one of them off here at these highs up here because these are equal highs. So I got out here and and then price came back down. That was a little bit of drawdown. I know price had to come up here, so I put in 2 more positions. Okay. And then I got scared a little bit and I sold one of them here. So now I only got 2 positions right here, which I should have held. I shouldn't have sold this one. I sold this one to break even because remember I got in here. So I'm in 2 positions right now, and I'll shoot another video in the future, but it's coming up here, okay? Guaranteed. And, well, you don't want to say guarantee with trading, but it's coming up here, I believe. I guess I'll say I believe, right? And so I'll sell my 2 positions here, even though I see it coming up here to this standard deviation line. I don't want to hold for the retracement. And, but this is a strategy I'll be teaching like the new people. The swing highs and swing lows in this shadow trading. I think I was going to keep it to myself, but I guess it's something I could tell people about because it is pretty powerful. Because you could not even know how the structure actually works and practice the shadow trading and actually win. Because if you can find pairs that already hit certain standard deviation areas, which I can show you what those are, then you already know that these areas, see right here. A lot of people may say, well, oh, shit, I thought it was going to keep running because GU and EU already hit this line. But see, sometimes you have to understand the structure as well. Like if you understood the structure, you would have saw that price wasn't just going to keep running up just because EU and GU already hit this line and hit this line. If you understand the structure, which takes time, then you would have understood that price, since this is a huge candle, see this huge push right here, is not just going to keep going into a straight line. If you understood the structure, price had to retrace. It had to retrace to at least come down here to fill in this huge gap right here, this huge push right here. This is a huge candle here. This is news, okay? Right at, yeah, this is news right here. So if you understood the structure, you would have understood that price couldn't just keep going up all the way up, right? You would have known that if you understood the structure. But that's why you have to use a stop loss and use risk management. Okay, because a lot of people would expect the price to just do this, but this wouldn't have made any sense at all if you really understand structure. This huge push right here, price had to come down here to fill in this gap because this created a gap right here. Okay, see that? Orders, it had no, price was only fulfilled on the buy side. It has to come down here and fulfill on the sell side. Okay, it has to fill in that gap. This is a gap right here. But if you didn't understand the structure, you probably would have had a stop loss, maybe at 50% or 25% of this push, and then you would have got stopped out, and then you would have saw that, price just was coming down to fill in this gap of this huge push, and then you could have got back in for a buy. Would have been a little bit of drawdown here, maybe would have got stopped out, or you would have got out, and then once it took this high, it would have told you that it was going higher. Okay, that's why you got to understand the structure as well. But until people really understand the structure, they need to make money on demo for a little while. And that's why I think showing them this shadow trading will really be good for people, and showing them the swing highs and the swing lows. So that's what I'll be showing like new people that come on board. Thanks for watching.